this thing off.
Okay, welcome in, guys. Another weekly webinar here. Just started, of course, recording as usual. Hope you all can hear us. We'll get over the macro side of things, and then, as usual, hop into the granular view. Let me just share my screen real quick. There's quite a bit of stuff that I want to go through that's partly from Research Reports channel. I've pinned a bunch of posts on the channel, and I will continue to do so every week when I find interesting things. The first thing that I want to focus on is all the open interest changes from Friday. And there are a few ones here that I think might be of interest to some of y'all, especially this MSTR, change in open interest on Friday was actually quite interesting. You can see that they are actively selling some calls against 350 strike on the bid side. So likely to see that these 9,000 contracts here will keep or hold MSTR down below 350. If it breaks above 350, then they'll be forced to chase the upside. So you got to be aware here that there is a kind of a collar that's been placed in lieu. Of course, these contracts here, the 1129 already dropped off. A lot of the 11 contracts which are for November have already dropped off. So don't even focus on those. I'm looking at only mainly this, which is a 300 put bought in big size on the mid side, which means it was neither a bid nor ask. And that was about 10,500 contracts for the end of December. Okay. And then there was also some 135 puts bought, which is the next biggest line on the outside, for this week expiry for 135 puts. Now, remember, this does not indicate that somebody has a bullish or bearish position. This is only for us to look at where the potential levels are at which these people are betting. Now, what you need to understand is when you're talking about options flow in general, we're not looking for specific flow. One line here doesn't give you the whole picture because you do not know what kind of positioning this trader is actually looking for. They might have gone to bought the 300 put, but you don't know how much long they are in equity, right? You don't know whether that's just a hedge. But it is important that if this pops up again this week, then we're going to take a look at it closer, right? So these are the main things that I want to show you from MSTR. For Tesla, once again, ignore the anything that is 1129, which is on the bottom here, but look at the top lines here. Some 370 calls were sold. So they took some profits on 370 calls into the rally on Friday. This was 48% bid. So you can see it's a minus here. That means that open interest was taken out of the market. So these are contracts that I closed. So Tesla calls 370 got taken profit. And then they were hitting some of the 100 puts and 200 puts for some reason, and then 80 puts and 90 puts for this week expiry. Now, based on pre-market pricing here, obviously Tesla's up 2%. So once again, you do not know what this person's betting on. We will have to see if there's repeat activity this week, and that will give us more information. You can see they also closed out some of the 360 calls, right? And they're continually bidding up the 300 puts. They took more of the 260 calls, and this is a straddle bid that just fell off, basically. Apart from that, so Tesla's on the more downside tape scenario, just based on this. But once again, no real confirmation there. Okay, next is Amazon. Now for Amazon, you can see here for this week expiry, they bought some 210 calls from last week Friday, as well as, let's see here, they were also betting on 197 puts. So this is a mixed bag. Now, anytime you see like this kind of price action, lots of bid, lots of mid, lots of ask, this is messy. There's no upside, downside, clear direction here. We'll only see more of this probably this week. Okay, now the important stuff, VIX. A lot of upside betting here. 28, 29 strikes, 13 puts. There's some on there. They closed out some of these calls. Looks like these, right, got rolled into these, right? They extended their December to January, and then they rolled down the strike by one. You can see the approximation of the contracts are about the same, and they kind of just swapped hands here. So this is a rolled VIX position. There's more calls being bought for $40 for February. And then you have $13 puts also as a hedge, probably. They took profits on some of the $21 calls here. So I'm only going to focus on those, not all of them, because the rest are not really that important. So there is some upside betting on the VIX here. That's the main thing that you need to look at. And then for TLT is the other one. Quite a mixed bag, but slightly more bid than asks here. So if you look at just call side action, you'll see they're kind of rolling up and out, which is nice to see, right? That goes in hand with our long-term view of bonds. Okay, next is Tesla. So with Tesla, you can see more granular view of just across the entire stock. 2027 calls got bought for January 15, 330. So this one to me screams share replacement. It's probably like a big institution, 4 million, not really that deep. Probably expanding their long-term exposure on Tesla. And then you have 340 calls for this week expiry, which got bought up. That's pretty unusual. And these already dropped off. And these 120 calls, I don't know who the hell bought that. That's probably also ones that deep in the money, right? And the rest of them are kind of long dated. I'm not really going to focus much on that. The premiums aren't that deep. But then you go look at the put side, and you'll see 340 puts for January expiry being bought at 1.8 million. And we'll track these open interest changes over time to give you more information here. But so far, Tesla looks more bull side dominated than bear side dominated. So the action for this week you'll need to see is if they continue slamming those calls on the bid side. Okay. And then you have SPX here. And this is a mixed bag, kind of, because you can see they have some call spreads for the upside, but then they also have risk reversal plays and ratio hedges all built into this tape here, which I'm seeing. There's also some defensive call spreads being bought. You can see these, which are on bid side. So they're sold call spreads, which means they're credits. So all in all, this is just it's not, there's no clear direction on the SPX betting here. It's just mostly noise. One of the ones that saw a little bit of spiking last week was Hasbro. Not sure if there's news pending on something, but this is a stock that hasn't moved on the options, expiry. So there was December 20th, $70 calls. This is what were bought. That's the main thing I'm focusing on. So that's all you need to do from a research report. But let's focus on the actual price action. And yes, I do have a small holding in Shiba. So Bitcoin still buoyed at around 97,000, came down last week to all the way around 90,000 to grab liquidity, and it's going back up here. Now, SPX, we barely broke out all-time high on Friday. This was mainly driven by some short covering, and that spiked up, causing a liquidity engineering situation potentially. This is not confirmed yet. Remember that as long as we bounce anywhere from here all the way to around 6,006, this would still be in a uptrend and is not in a sustained downtrend yet, right? And this is the reason why when we corrected downward here, I was telling you guys, there's no reason to get bearish yet until we really start making lower highs, lower lows. We're not in that scenario yet. We're still in a bullish trend wave. But now that we're snagging this resistance up here about twice or 3 times in the past, 1 month, you can see the first time was on 10th November, and then the second time was on 26th November, and now the third time on 1st December. If this doesn't hold or start to climb higher, then I expect a little bit of a broader correction here on SPX, potentially back into the dual zone at around 5,960. Okay. My year-end target for SPX is still 6,100. So if we, don't go for a deeper corrective wave here for the first 2 weeks of December, then likely what we're going to see is just a quick push up. My view is that there may be another liquidity flush down to capture some off-guard traders who are really not watching their portfolio closely and gets kind of squeezed out here. But we'll see what time tells. As long as I can just picture this, it's very simple. You don't bet bearish until you see the trend change. And NASDAQ, this is the problem child. This is the one that's really causing the problems here because it's weak. It's weaker than the S&P 500, and for good reason, because we're expecting higher inflation, we're expecting higher discount rates for stocks. bond yields are, stabilizing, but we'll see all of that kind of pan out in the second week of December more than likely. But all in all, still good, still recovered from these lows here. As long as we break out here, we'll get up into 21,638, which will be the main, push for NASDAQ, which will then push everything else. IWM pretty much moved into all-time highs or close to all-time highs on Friday, and then came down and got rejected a little bit. So be watching this one for potential pullback, and if it can give a pullback, then we might want to play a bounce of some kind. But all in all, not really that interested because look at where our entries are on this, right? Way lower at here, right? So I don't really care so much about chasing this to the upside. I have upside positioning. I'm exposed already. This is more for people who are not in this trade at all. If this thing does come down hard, for whatever reason, then you might get an entry. Bonds bounced very nicely since our second alert for bonds entry. I told you guys this was my last edition for bonds. Remember, this is not about capital gains here. You're not looking for this thing to go from 73 to 75. That's not the game. Remember that. For bonds, the game is holding those yields and getting the coupon payment from them, right? As I've showed you before from my portfolio, this is about getting the dividend income, right? Which is going to be, where is it? Where did this go? I think it's here. No, it's not here. Okay, never mind. I'll show it to you guys later. I don't want to waste time. But you want to be holding bonds for the dividend income, not for the capital gains on them, okay? Because they're mostly a cash flow instrument. Now, if you look at the dollar, rejected out of the potential rejection zone that we were talking about, 108 was a very scary level. It's come down now, potentially forming a right head here. If you look at this on the 6 hour, you'll see a left head, a left shoulder, a top head, and then a right shoulder potentially forming, which would then form a head and shoulder pattern on the dollar index, which would potentially lead to further downslide. Remember that the bond 10-year yield moving down together with the dollar moving down is now going to cause upward pressure on stocks, right? So where we were before, where stocks couldn't quite break out, now the conditions for those are improving. So this is the reason why I say, even though there is speculation for downside on the SPX, we don't need to take it until we really see a confirmation on this, okay? And lastly is the VIX. And I think that if you want a cheap hedge for your portfolio in this 1 month, all the way till January, I would do a 2 to 3 month out VIX call spread that will allow you to take advantage of this. You can easily go for something like a $21 to $24 call spread. That means you sell the $21 spread and you buy the $21 call, and you would get a cheaper net upside. This will give you at least a 1:2 to 1:3 risk reward ratio. And if the VIX spikes, then you get paid. So I think it's a very simple trade to put on that you can benefit, and you won't be paying full price for the VIX exposure. Okay, that's all I have for now on macro technicals and backdrop. Just a few things. To me, there are a couple of sectors that look slightly overbought. I've done a sector breakdown on the Discord research report channel. You'll see it here. You scroll up. You can see here the sector updates. So these are based on the RSI type looking charts where 30 is oversold and 70 is overbought kind of vibe. Of course, it doesn't mean that 30 means you buy, 70 means you sell. It simply means that these are where positions are stretched or awaiting confirmation or not confirmed. So you can see materials bounced, consumer discretionary has downside potential, consumer staples has bounced, but I should probably edit this one. Bounce with downside potential. Okay. And then energy is cooling as well. Financials are now overbought. Healthcare has bounced. Housing has upside potential. Industrials are approaching overbought. Oil producers are overbought. REITs are halfway through a move. Semiconductors have bounced, so we're looking for a potential long entry after that liquidity engineering move last week. And technology is cooling, potentially waiting for a long entry, but still waiting confirmation. So this, of course, will be largely driven by NASDAQ and SPX, and then utilities finally overbought and potentially cooling. So that's where your sectors stand. There are some trade opportunities here, but I'll hand it off to Andrew to look into the granular view of this on where SPY levels are and whatnot, so we can get a better picture on this. And yeah, that's all I have for now. I'll share the specific details of other charts later.
Sounds good. Let me share my screen. All right, there we go. Don't need that. There we go. All right. So there is a lot of information to look at here. So I'm going to start real quick with just an overview of the options flow, kind of supporting a few of the things that T was showing here. So the first thing you can see is that this is Friday's flow. So you guys can see that the market was extremely bullish, right? A lot of calls being bought on every single dip and no puts being bought, right? Puts are negative, -10, right? So the market is very bullish from a positioning standpoint going into this week, and I'll explain why. I'm going to open this up real quick so I can just see the comments and things if there's things that come across. So, and then we look at this from a 5-day standpoint, right? We see the same thing. So again, right, as market is pulling back, calls are holding, price reacts, right? As the market's pulling back, calls are holding, and price reacts, right? So that's the main thing I'll be watching for this week is if we do get a pullback, do the calls continue to grow? And if they do, then that gives us some type of indication, right, that there's upside possibility. I spoke about it before we started recording that there was some calls bought
Yeah.
on Friday, these 12, 13 calls
Mm.
for 606 strike. And you can see 7.4 million. You can open it up here real quick and you can see the actual calls right here, 12, 13. Oops, didn't put my strike. There you go. Right, you can see the calls right there that were bought. So, right, so that's another thing just to keep in mind, right? There is some bullish positioning going into this week. Does that mean the market's going up this week? Not necessarily, but it means it's something you'd want to pay attention to. So that's the first things to kind of look at. The next thing we want to look at is the gamma, right? And if you go to last week, we had this huge level at 600 and there was nothing else. That was the only thing we saw. We saw this big level at 600 and then we saw nothing. And you can see that that's changed.
Mm.
So you can now see that here's 600, but now there's 605,
Mm.
610, all the way up to 615.
Wow, and 615 is the biggest one. God damn.
So there's positioning changing. Something has happened within the data over the last week from where we were at 600 being our largest level to now we're seeing levels build all the way up to 615. And if we go into this deeper and we go to December 20th, this is where all the contracts are. So we're looking at the next few weeks, some type of Santa rally probably is my guess. The only way I would change that belief would be if we start to work under 600, then I'd start to say, okay, maybe, be a little cautious, but definitely there is a change within the data. So for me, the way I evaluate information is as long as we're closing above that key level of 600, then for me, 605 is the target. Or if we get over 605, then 610 is the target. If we get over 610, then 615 is the target. And none of that would surprise me because you can see the positioning is already built there. Okay, so that's one thing to keep in mind. Like if you're somebody who's getting really bearish because somebody on Twitter or Instagram is telling you that the market is overextended and the crash has to come and they're all this other bullshit, whatever story they want to sell, just know that the data is going to tell you something different, right? So if price gets below 600, then yes, there's opportunity to short. I would be very careful trying to short if price doesn't get below 600. So just keep that in mind. Now, if we look at this from an algo standpoint, yes, there is some bearish positioning going on, right? So if we take a look at this week, we can see, right, the flow had some bearish positioning down here around 600 and down here around 600. This is over the next week, 596, 594, which I'll explain, what could possibly be setting up here. And then 30 days, right, we can see some bearish positioning down here as well. So there is some bearish positioning. That's why I said if price gets below 600, there is opportunities to possibly play some type of liquidity sweep or a possible pullback, wave structure, something along those lines. But again, 600 is going to be that key level that we want to pay attention to, because as we start to look deeper into these levels and what we're kind of looking at, we can see right here that for this week at 605, you have a positive gamma wall, right? So if price gets over 605, I feel very confident that price is going to head to 610. Right? So there's a wall of selling at 605. So if somehow price breaks through 605, there's a good chance that we're going to see 610 become this magnet and pull price up into it. And you guys that have been here the whole year and been a part of this, you've seen this countless times. For new people, it might be something different. If we take a look at December 13th, we can see there's a positive gamma wall at 600, right? So that means there's going to be buying coming off of 600 level. And again, we see exposure at 610. So again, right, if we stay above 600, there's a good chance that we see this market continue to make this move up towards those upper extensions. And then lastly, if we get in December 20th, right, again, supporting the last image, right, a lot of exposure at 610, right? So again, those things. Now, if we take a look at the dealers, how are dealers positioned? Well, if we look at all expirations, dealers are short 603, 610, and they're longs 595. So if price gets over 603, which is where we closed on Friday, dealers have to buy, therefore creating buying pressure, therefore pushing price up into 605. We break over 605. That is a selling wall. And if we break through it, then 610 becomes the magnet, and so on. And you see how the pathway starts to get created. So all expirations, 603 and 610, right, are two of the bigger levels. Downside, if we get below 595, then you start to create some selling pressure. And you can see it all here on December 20th, right? Here's December 20th, and you can see dealers are short 603, 610, and 615. So again, if price stays above 603, it's a good chance that we see this buying pressure kick in, right? And the market start to push towards 605 and then upwards towards 610. So this is all important because if we look at our weekly range, we are looking at potentially 596.79 for the downside and 608.45 for the upside, which puts us in that 610 ballpark, right? If we look at last week, we said if price got over this 597 area, we were looking for a push up into 600. And if we broke 600, then we were looking for a move to 601.88. And if we look at our price, that's exactly what we got, right? This is last week. 597 is right about here, right? And we broke through it. We pushed up into 600. We broke 600. We pushed up into that 601.88. So where does that leave us this week? Well, if price can get below, let me delete this stuff real quick. There we go. If price can get below 600 and somehow reject it, then I would look for downside, right? And a retrace off of this wave, right? And this would look like a liquidity sweep right here, right? You have an established high and you take that high out and then you came back down and then you rejected it, right? And then you would look for that move down into that 595 or maybe down into the golden pocket of that wave, which would be about 590. Now, if price stays bullish and we get over 603, right? The buying pressure kicks in. That pushes us up into 605. If we break 605, that pushes us up into 608.45 or 610, right? And we can very easily make that situation happen. So that's where the 600 level comes in key, right? You have an established high here. You took that high out. So if you're going short, you're saying that you believe this is a liquidity sweep and price is going to come back down and you're going to get this move. So if you know something that tells you that, then great. If you don't, I mean, you're betting against the market makers, so be careful. So that's kind of the key thing to pay attention to here. So price below 600, I like a move down into 595, 590 area. If price stays above 600 and breaks over this level, then I'm expecting a move up into this 608.45 or potentially 610, right? That could be a possibility there. So the problem you have here, and this is where it gets tricky, is is this move here potentially the extension of this wave?
Mhm.
Right? So some people might be calling, oh, this is a double top and we can reject here and come back down.
Mhm.
Well, that's not going to be the case if this is an extension of this wave, because now this wave is making its push, right? And so your targets would actually end up being, from a Fibonacci standpoint, right? Your targets from a Fibonacci standpoint would be something along the lines of there to there, up to about 610 and then 620. So you're sitting here going, oh, but it can't go higher. But if this is your wave structure and this is your extension, then 610 lines up. And if it breaks 610, you're actually up in the ballparks of 620. So that's where you have to be careful if you start shorting and price hasn't lost 600, because you're betting that that's not the wave structure.
Mhm.
So you got to be right. And if you're right, then fantastic. You caught a great short. And if you're wrong, you're going to get squeezed with the market makers. And you're going to have to hear me say, fuck your puts. And you're probably going to get upset about it. So just accept the other side of the coin. Yes, I use a 4 hour candle. I don't play $1 to $2 moves. I don't play the 3 minute candle, the 5 minute candle, all that stuff. I play 4 hours of price action, and where does the candle close? Does it close above the level or below the level? Based on that, that gives me indication of what could happen here. So for example, if you look at this candle right here, you can see this 4 hour candle holds 600. And so what does the next candle do? The next candle goes up to 603, which is the buying pressure level. So that is how I look at price action and how I measure if I would like to take on risk or not. So that is some of the key things you're gonna have to pay attention to. If you're in the Discord, all of that is posted in the playbook, so you guys have access to it. If you're not, hopefully you took notes so you can follow along. I posted the pictures in all the different groups so people have access to them and should be able to answer any questions that you guys have. So with that, I will open it up to you guys and your questions.
Now, remember, next week, the same time, we're going to be holding a webinar. It's going to be a webinar on intro to market making. If you haven't signed up yet, you should probably do so. We are 50 spots already in, 50 remain, and that will be the only spots that will be left for the webinar. I know not all 100 will attend, even though you have participated and put in your email address. So there should be enough spots for everybody, but you should still sign up, because after that webinar, we have another thing coming. And if you're a part of that list, you will be updated. So
Yep.
it's highly recommended that you sign up for that list and be in the know-how of when the next event is going to happen. We have a lot planned for 2025, at least 2 more big webinar events, and then a bunch of podcasts that will assist you guys. So just sign up for the webinar and then you'll be in the list, and that's all you need to do. I do have some individual stock ideas that I want to just kind of present to you guys. They're not really directional in nature, but there's your usual suspects like Amazon, which I think is a interesting chart right now. If you're looking at Amazon, it has bounced off its very important 205 level on Friday, which was, acting as a previous kind of resistance back on, the previous Friday. And now that that old resistance is now becoming support, which is nice. Now, obviously, this has a high so far of about 215, which was on the 14th of November, but it still has legs for 220. Remember that a while back we also saw some of the options flow pointing towards bullish activity towards 220 by February. Again, doesn't mean that we get there automatically. It just means that there is interest for that to happen. So Amazon is one of them that I'm looking at. The one thing that I want to be aware of when I'm thinking about Amazon here is also the fact that the consumer discretionary sector is not exactly in its best state for upside. And Amazon and Tesla make up the consumer discretionary sector, but you guys know that these 2 stocks have been very hot ever since interest rate expectations have come down. So because of that, I expect the sector to be overbought for a little while. So don't try to short into the stock just because you think, that, oh, this sector is overbought. No, it doesn't work that way. Remember, the market can be irrational far longer than you can be, just thinking of these opportunities and trying to take them. Uh,
Yeah.
the other one that you should be keeping on watch this week is Apple, because Apple is on the verge of breaking into all-time highs.
Yeah.
And you guys know what happens when Apple breaks all-time highs. If you've been trading Apple before at all-time highs, it tends to always, melt up because, for whatever reason, people think that they're speculating downside on Apple. This one has legs to move up. And if you go based on the Fibonacci extension from previous level wave, there is easily upside for the first extension to be at 247, roughly, which is the 23.6 extension. And then from there, you have 253 and then roughly 262 as your Fibonacci 1.68 extension, 1.618 extension. So that's Apple's little thing that I'm looking at. If it can go, yeah, that's the one. If it can go higher, then we might look at that 248 to 260 level as potential targets. Next up is Zscaler. This is one of the cybersecurity stocks that have been kind of lagging a little bit. You can see DDoG rallied hard last week and the week before, but Zscaler has yet to do so. It's bouncing on previous resistance, which is nice. If we can get a confirmation this week, I will be happy to take a potential upside swing here if the opportunity presents itself. And once again, the first target would be about 220, then 230, then 240. It's a very simple extension targets on Zscaler.
Yeah.
And then the last one that I want to bring to your attention is Square.
Yeah.
And Square has a pretty nasty rejection here in the supply zone, I would like to call it. It's rejected this level before. It looks like a pretty clean liquidity sweep. And once again, I don't want to bet bearish until I get a confirmation of bearish. And what does that look like? That means that this stock makes a wave down first and then comes back to reject the 89.50 to $90 level. And if it can actually reject the 89.50 to $90 level, I will be looking to take a short position on Square in the short term, not to play it like a big swing, but a short-term swing. I'm talking 2 weeks out. Okay.
Yeah.
So those are the ones that I'm primarily going to be focusing on for this week. Those are 1, 2, 3, 4, 5 setups that will be on the snipe list. I thought I should just go through them with you guys so that you kind of have an idea. Kodak. Yeah. Kodak was the other one. Kodak from last week, right? There was a Wall Street bets post on it. This stock is having.
So real quick, I want to on Amazon. So this is why I like to use longer time frames. So you can see with Amazon, this is an easy one. See how there's no candles closing over 210? See how both candles reject it? So now go to the data. See how you have a wall at 210?
Mm.
If Amazon closes over 210, that wall gets taken out, buyer step in, price goes higher, right? That's why you don't want to short things just because. And if you did want to short, then 210 would have to be your stop loss. Apple, same thing. See how the gamma is building? There's 240. You can see 250 is already building.
Yeah.
So if price closes over 240, 250 becomes the target. It's that simple. So if you're looking at it and you're saying, oh, I want to go long, well, 240 is still your wall.
Yeah.
So you could go long here, but you just need to understand that price could go up to 240 and reject and come down.
Yeah. So that's where I like the entry actually. So I wanted to break out and pull back. So Apple, I'm putting it in front of you because this is something that we'll be watching in the next couple of weeks. And if the S&P 500 is actually going to rally, then it needs Apple. So
yep, 100%. So if we're going to 615, right? Let's say possibly we're going to 615.
Yeah, then that's definitely
Apple is going to take us there.
Yep, exactly.
Most likely, right? You got to look at it from that perspective of like, okay, if SPY is setting up for a potential move to 610, 615 into the end of December, well then something has to take us there, right? And Apple setting up for a big move here could potentially be that setup. right? So these are key levels that you want to be paying attention to. And if you don't have them on your chart, you should have them on your chart. But 240 for Apple and 210 for Amazon are going to be extremely important.
Mhm.
So just to add those 2 points.
Yep, I agree. I agree.
Okay, let's see. Kodak. I think this is your short squeeze idea, right, T?
Yeah, it was posted on Wall Street Bets. That's where I got the idea from. Somebody
Yes.
mentioned that they
Yeah,
have
my chart
more
over my charts look
cash.
like this.
They have more cash than the stock was valued, which obviously we've seen those situations happen before. I think last time that happened was it was Walgreens. They had like more cash than their main liabilities, and the stock popped after that. Um,
There's nothing from a data standpoint that gives you any insight on this other than they have more cash than they're supposed to have.
Yeah, and once again, you need to wait for this big buying pressure to release itself first before I even think of entering long here. Let the buyers get exhausted. Let sellers take over the market and see where they end up. That's why I always fare these kinds of things, especially with the speculative position. I don't want to go gung ho in trying to, go and take a long position here, especially with the gamma being so expanded.
Yeah.
Here's where I wait for a pullback, see if it can come down to around 630, all the way down to 578. Sorry, like somewhere around there. It's a weird number, I know, but
Yeah.
somewhere around there. I want to see a pullback to that level. And then if it finds a demand there, then okay, sure, I'll enter long, right?
Yeah. Yeah. This is a tricky one. I would say this is all speculative, play at your own risk
Yeah,
type of situation. I want to see if there's any entry points. That was a good entry point there
yeah.
in the golden pocket, and then you can see that it hit the extension. So this wave might still be intact. My guess would be if it doesn't take this high out, you're going to come back down into this wave, which would be 540 to 510. But there's not a lot to go off of here. So
Yeah, yeah. There's not much in terms of data. I
careful.
mean, this is just mainly, I think, the Wall Street bets buying on and then market makers adjusting their exposure. So that's what caused the big spike.
Yeah. Okay.
Uh,
So we already looked at Square.
there was, I think, Rich was asking about Meta.
Meta. So Meta, nothing has been confirmed. You got
Yeah,
to get through 600.
this one's so messy. Valuations at 545, by the way.
I like the consolidation above the previous range, but you have to clear 600 before there's anything.
Mhm.
So, I mean, could it happen? Absolutely. There's your 600 wall though.
Oh, that's a
So
messy.
you got nothing until you clear 600.
Oh, geez. That's 163 million sitting there.
So get through 600 and it's fantastic. No 600. Uh, so if you're playing short-term options, you just have to be aware of that, right? Like I think it probably comes back up to 600, especially if the market's pushing up to like, let's say 610, 615. Got to get through 600. I mean, it's a really nice bull flag here. So, and it bounced right off of this, was it 550 right here? Yeah, this 550 level.
Mhm.
So, but 600 is and you can see they liquidity sweep 600 before they sold off. So they knew what they were doing. Uh, T Rowe Price added shares after earnings jump, added more after it dipped back down. One of the financials I saw that looked undervalued. Thoughts? T
Zero.
Rowe.
I haven't looked at that stock in a very long time.
We're gonna go into a longer term chart. Just in a nice consolidation.
Oh, this looks pretty nice, actually. I'm not gonna lie.
Yeah, nice consolidation. Yeah,
Ah, nice.
here. My target from a fib standpoint would be 181 to 193. This looks like a nice little liquidity sweep here. So you have established low. They took it out, swept the low, established a higher low, and now you're looking to take out these highs here. Once you take out those highs, then you start to move up into this area and then towards the golden pocket. I'm not going to have much data on something like this because it's not something that sees a lot of options flow.
Looks like 133.50 is like a
And a
base.
wall at 125.
It's 125. That's what it is. Okay, got it. Yeah. So
You got a
125 is what it actually is here.
125 right there. You're right at the wall.
Hmm.
So over 125 looks good because you got this wave right here on the shorter term. This is your wave. And so your extension's up here at 144.
That's LR.
So get rid of that. Okay. Meta looking to, okay, I already talked about Meta. First solar golden pocket bounce. Yes, it did. I believe so. Yeah, bounced right out of the golden pocket. It's already charted. Risk to reward needs to get through 200. It's an easy one. We posted this a long time ago. There's your wall at 200, your support. So you got to get over 200. It was a good risk to reward out of here. You can see the weekly candles getting bought up out of the golden pocket. I'm sure if I turn on order blocks, you're going to see order blocks down here on the daily. There's one right there. That looks like a liquidity sweep.
Yeah.
So yeah, you're looking over 200 looks good.
This looks good for a long position swing trade.
Mm-hmm. Golden
Uh,
pocket is 234 to 242 on this
my
region.
only concern with this would be around, I think, the 213, $214 level.
Yeah,
Uh,
right here.
well, yeah, that'll act as a temporary resistance, probably.
Yeah. You
Create some,
probably end up getting an inverse here. You'll probably end up going like this and then
yeah, going back
inversing head
down.
and shoulders and
Yeah,
then completing your move.
yeah. I think that's what I would wait for.
Yeah.
That's what I would wait.
It's probably what you're looking at. But yeah, 200 is your key level.
Yep.
4 hour. Let's see, 4 hour. Yeah, it looks like it just broke that order block there. Dark pool activity was there. So we talked about that on one of the sessions. You can see they've been holding it down below 200, 200, 200, 200. So you need to close over 200.
Mhm.
Easy. Andrew, no pump and dumps from me looking at the semiconductors, SOX, ASML, and if you feel like AMD. AMD needs to get 140. That's an easy one. That's my number one position right now. So
AMD has been messy, man.
needs to get over 140. You got a nice little bullish divergence here on the 4 hour as you made a lower low here and you made a higher low. So you need to clear 140 to get your move to 150. Then you got to clear 150 for your move up to 160. I have a 2 year target in the 300s on this. So, but anything short term, you need to get through 140. You can see here, gamma nice build up here, 150, kind of the peak. So I think if it closes over 140, I'm looking for that move to 150. You still have some support down here as well at 135. So AMD, I wouldn't play it short term. But I still like it from a longer term perspective. Like here's my long term chart. This wave right here is the wave that I'm watching. So we had this nice breakout here. If you guys remember, we talked about that earlier in the year.
Mhm.
Here you have this wave, and you can see that it came down into the golden pocket. So far, it's holding nicely. So, the next wave structure for this, if it follows wave structure, would be this move here. So, as long as 125 holds, I'm bullish. No reason to change my process here.
Yeah.
So the other ones, socks, you're not going to get much data on it, most likely. That looks like a head and shoulders. Let's see. Anything?
Oh,
Uh,
there's two catalyst events for this week that you guys need to be aware of. Number one, Robinhood has an investor day on Wednesday, and then
yep.
I believe Amazon has another like something happening on
They got Cyber Monday numbers too.
yeah. Uh, it's on the research report channel if you go look. Let me find it for you guys.
210, 205, and 200. So 210, 210, which is right there, or 205, which is right here. So the gamma supports tend to be holding here. That's a good sign. So you can see how they're holding. And then 200, which I'm guessing is this guy down here. So yeah. So you got good support down here from a gamma standpoint. You can see here, you got all this gamma down here playing support. And so that's your neckline. So if that breaks, right, then it comes all the way down to probably about 184 to 173. And if that holds, this might be a golden pocket bounce here. Let's see. Just about. Yeah. I mean, if it holds, then you're looking for a move back up into these highs up here. And if it breaks and it's come down here, you got a nice little weekly order block here that's holding so far, right? That's an order block right there. So you're sitting in the order block. I don't like it on a short-term basis by any chance. Um, and you've got this head and shoulders that probably everyone's looking to go short on. So if semiconductors bounce, I would look for a move up. If not, it's probably going to come down into this area. The chart doesn't look good by any means. I'll tell you that much. ASML. ASML. This is the problem you have here is it's below the golden pocket. So you need this to get bought back up and this to look like a liquidity sweep. So right now, I'm not a fan. You can also see that the price is getting rejected in this order block, right? So your order block's right there, and you can see that price is getting rejected there. So this needs to get up into here, consolidate, make this look like a liquidity sweep, and then break to the upside.
Mhm.
The problem is if it breaks below the golden pocket and it doesn't get back, it usually comes all the way down into the full extension of the fib. So not a massive fan of that. I think this wave all the way down.
You'll have a couple of catalysts in December. Blackwell chips, numbers will come out, and
Yep.
that may push the semiconductor space into a weird space for a while. Uh,
Yeah.
so just be aware of that.
And you're below the 700 level. So 700 is your biggest area of support and you broke it. So that goes back to my point about the golden pocket. So I would say I would move this and I would say as long as you get over 700, you're okay. Under 700, I would be cautious. And that's exactly what it's rejecting on. So you can see now that it's rejecting on that 700 level. See? So unless you get over 700, I wouldn't be getting bullish on this. Okay. NXPI, I don't know what that is. Probably going to be a lot of the same. Is that it? It's not a bad place. Again, you've got a nice little order block right here that could play as support. So it's not horrible. Again, it's tough because let's see if you have anything here. You've got a nice at 240. So you got a wall at 240. I bet you that's exactly what it rejected off of. Yeah, same thing. It's got to get over 240. Yeah. You gotta see how they keep rejecting 240. You gotta close over 240. Close over 240, and your target would be 270 to 277. Other than that, not a huge fan. Okay. Can you sign up for Discord? Okay, we got that done. Can you check EVGO? What is it? Nice bounce.
Really?
Problem I see here is it didn't come all the way down to the bottom of this wave. So I don't like setups like this because again, the problem is, right, what's going to happen most likely is it's going to retrace. It's going to hit this. It's going to make your lower high, and then it's going to complete its move down. Um, so the question is, do you like the risk here? As long as you're okay with the risk coming down into here, you could go long here. And if you wanted to go short here, you'd have to be okay with it coming up to here and doing that. So it's not an ideal place to enter. Um, and you've got a wall at 7. So I wouldn't go long unless it gets over 7. There's your wall. Right exposure levels. It's an easy one. Right exposure levels 15, 20. 15 and 20. Pretty sure I have them marked. Maybe not. Oh, golden pocket 15 to 17. Yeah, there's 20 right there. Yeah, I already have them marked. I guess I could put 15 on there. I don't have it on there. 15. Remember, if you're playing these, you're playing Bitcoin. So you can see it didn't close over 15. So you got to close over 15. Easy. Shares, if I hold them 2 years, will I start losing money to decay? Yes, you will. If you hold leverage shares that long, you will lose the decay. Doesn't mean you won't make money, just means you won't make as much.
Yeah, that's
So we've already gone over that with NVIDIA, right? NVDU is a perfect example. If you look at this is leverage, right? It never pushed all-time high. All-time high is up here. It never got there, right? But if you look at actual NVIDIA, it did break all-time high. So yes, you will lose money. Does not mean you won't make any money. It just means you won't make the same percentage. So yes, you cannot. It will lose some money. Roblox long term to the upside extension. Roblox.
there was some news on Roblox.
Yeah, you posted something about it. Yeah, so I have a retrace here. I think I'm on the 4 hour if I remember correctly.
Not what I posted on Roblox.
Um, maybe it's the daily.
They're having some sale or something. I don't know.
Yeah, there it is. It's the daily. So right now you're holding nicely here. Let's see, there's probably a support there. Yeah, you got some gamma levels 5250 and 55 and a little bit of support at 50. So 5250 is here. 250. That's resistance. And we said 55, which is exactly where you rejected. Rejected there. And then we said support at 50, which is exactly where it's kind of bouncing. Get rid of these ones down here. These are old. Okay. So this is a tricky one. Do you want to enter here? Maybe. If you look at into the long term, right? It's a good entry because you're looking at, maybe it bounces here, right? You're bouncing in this, you've had this order block here that's held price down this whole time. And if it breaks this high, right, it confirms that move to the upside.
Yep.
The problem is if you enter here from a wave structure standpoint, this can come all the way down to 43 to 41.
Mm-hmm.
And so if you're not okay with that risk, you wouldn't enter here. So if you're okay with that risk and you understand the risk that you're taking on, then it's good. If you're not okay with that, then you'd have to be patient and wait for a close over 55, which is a wall. It's already been confirmed. Or you'd look for an opportunity out of the golden pocket to play the move to the upside. This did just bounce out of a golden pocket. That's what this current wave is, right? If you take this right here and you go to this low, and I think we actually talked about this a while ago, and you go to this high, there's your golden pocket bounce right there. And so this is an example of what I told you guys, right? Like you have this move down, and then you get this retrace, and you don't take the high out, and then you come all the way down to the golden pocket. So that's where I said, like, some of these things you'll send me, and you'll be like, hey, it had a little pullback, and you're like, hey, do I get in here? It's a hard answer, right? Because if you're only looking for like a 1 week move and you're just looking for a quick retrace, then yes. If you're looking for the big move and you're like, I want to catch the big move, then the answer is no, because you haven't made the full retrace yet. So a lot of people probably got into Roblox, on this pullback here thinking, oh, it's a bull flag. And then it broke out and then they got excited and then they washed everybody out. And now, right, you get the bigger move. So you can see it rejected right off that first fib. So the extension of that wave is 61.53. So you need that close over 55 to complete that move up into that extension, but you're not there yet. So you could enter there. It's not the best entry point, because a lot of the moves already been missed. So just something to be aware of when you guys are looking for positions, right? So just keep that in mind. Okay. I think I got everybody's questions.
Yeah, I think we're good.
All right.
Well, thank you all for coming and hanging out. We'll see you on the pre-market. I'll probably record a video and put it up for you guys. I mean, there's not much else going on these days.
Yeah, we will. Let's see. This one target is actually pretty nice. 102 to 113 is your upside golden pocket.
I think Nancy Pelosi has a big allocation to this one as well.
And you guys might think this stuff is crazy, right? So like I post things like this all the time and people are like, yo, it's a really high target up there. Let me show you guys again. This is not short term, right? Here's one where it hit.
Oh yeah.
See?
Oh no, yeah. Shit was
What
mad.
did it go to? It went to the golden pocket.
People made millions off this, dude. Millions.
Where is SoFi going?
SoFi too. That one's one of my top picks.
Going to the golden pocket.
Yeah.
So these long-term targets, right? Like if they break this structure, they can get there.
Yeah. Number one, I will be posting this recording on YouTube as soon as it renders. Number two, yes, I'll be live trading tomorrow. So I'll see you guys about an hour before the market opens. I'll be there to kind of go over the pre-market on live, and then after that, we'll be doing a live trading session on the small account. The small account challenge is still continuing. For those of you that don't know the update, last week we took two semiconductor trades that went south. Intel and AMD both were at a loss, and the account currently sits at minus $50 total. I've posted all the updates, and once again, as usual, as often as possible, I'll be doing a live login to my brokerage on Webull so that you guys can see everything's legit, and the fills are exactly what I'm putting on there so that there's transparency. But yeah, the 5K account just chugs along. It's cool. First week we were up $200. This week we were down $200. We're basically back to break even. And that's going to happen sometimes. You're going to get setups and they're not going to play out. So we'll continue on this week.
Absolutely. All right. Well, you guys all have a fantastic night. I will see you guys in the morning. And hopefully you guys sign up for the webinar so you guys can get a better understanding of what it is we're talking about, because it'll be more of an in-depth conversation into how the data works or how we read that information, so you guys have a better understanding of what we're talking about in these sessions. And then the bigger one that we're going to do, the 2-day event, that is going to be pretty massive, and that's going to be a deep dive into a lot of the concepts that me and T use on a daily basis to understand things. So other than that, you guys have a fantastic night. If you guys have any questions, feel free to reach out. We'll talk to you guys later.
Okay, sorry, I forgot to mention one final thing. A lot of you have been DMing me, asking me if the coupon code is still available. It's not. The sale ended like 2 days ago. I'm not going to keep extending it because I don't think it's fair to other people who really took the time to sign up first. So I'm keeping it fair. I'm not allowing any more people into the coupon codes. But you're still free to join as a free member if you want. If you want to upgrade to premium, you can do so at the full price. I'm not giving any more discounts. That we hold one sale a year and that's it. So I'm just going to be fair to everybody and let's leave it at that. I know I received at least 3 of you messaged me after the discount code was over, and you're like, "Can I get in?" And I can't. I just genuinely have to be fair. So sorry about that, but you can join in next time that we have a sale. The Discord will be closed till then. But thank you for attending. We'll see you on the next webinar. Next week's one will be special. Lock in your calendars, sign up for the webinar, and we'll see you on the next one, guys. Peace. Take care.